Hi guys, what's going on? In this video, we're going to talk about something incredibly important if you are an options trader, and that is the context of the trade. So you're probably looking at the market dropping this morning on Friday, May the 6th, and you were like, well, holy shit, it's dropping. Damn it, I got to buy some puts. And just as you were thinking that, and you were pulling the trigger to buy puts, guess what we're doing? We're actually buying calls and collecting profits on puts. So how can this be possible? Leo, you've been so damn bearish. Well, let me break this down for you. So this is how it looks on the chart. So you listen to some of my bearish videos, and on Wednesday when the market does this, you're like, well, fuck, Leo, the market is going higher. Damn it, Leo is fucking wrong. I can't believe this shit. I'm buying calls. So right here, you're buying calls because you see this huge rip in the market higher, about 1,000 points on the Dow. And then the next day, you're like, well, shit, market is dropping. Fuck, maybe Leo is right. And so you miss this entire drop. You're like, well, I can't believe, I thought things were just getting bullish. And so the next day, today on Friday, you're looking at the market dropping right off the bat in the morning, and you're like, well, fuck it, this is it. I'm buying puts. And so this is exactly the time when we're actually selling puts, when we're collecting money on puts. And so maybe if you're watching some of the videos, but you're a little bit lost, or maybe you're watching the videos and you just, I'm so close, but you don't know exactly what the difference is, guys. The difference is working with a 13 market moves coach. We got some stellar guys. I don't allow anybody here to be a coach that has not taken an account of $5,000 to at least $500,000. So if you work with a 13 market moves coach, guys, they have done it. There's not some other YouTube channels where they just talk about, oh, this stock is good for holding in the next 5 fucking years. Good luck with that. How much money is that going to make you? I mean, these are guys, if you work with a 13 market moves coach, these are guys that have taken a 5K account to 500K. These are guys that have taken 25K account to $1 million. These guys have done it. They know the 13 market move strategy. They can help you because couple of minutes off on the entry, couple of minutes off on the exit, guys, it makes a huge difference. So from fuck Leo to I love you, Leo, very much, okay, for those of you that stayed with the trade and collected a ton of profits this week. We've got a bunch of students that done that now. There's always a few guys that might have pulled the rig at not so perfect time, and they're still struggling. So pay close to this attention because I'm going to break down exactly how you can improve, and that is by making sense of the context of the trade. So this is exactly what we sent you this morning, guys. Short ES, which means short S&P 500 futures. The way we short them is by buying put options on the actual futures. And so if you're unfamiliar with these guys, you've got to get this guy. There's actually some guys in the alerts that are still like, whoa, Leo, how do I do this? How do I trade the market before it even opens with options? I thought I can't trade options until the market opens. No, that's absolute bullshit. That means you're either new or you've never talked to a 13 market moves coach. This is why you have no idea how to short the market utilizing options before it even opens. But we've told you that 11 minutes after the job report, when the market started bouncing, we told you to short it. We told you specifically to short it at 41.49, which I'm going to put the chart here on the screen in perspective. And later in the day, we told you, not later in the day, but literally, 18 minutes later, we told you to start closing puts, okay? And we told you 30 minutes later to close all puts because the bounce was coming. So just as you were buying puts after watching the market drop, we're actually collecting profits on the puts, and we're buying calls. You can see the next alert here is dash call, 70 strike. Let's go. All right, so the context of the trade. What do we mean by that? All right, so here's the market at 41.50. The job report number came out right here. And right after the job number, what do you want to do? You want to watch what it does. You want to trade in the opposite of the initial reaction. So the initial reaction is to the upside. Hits 41.50. Look, this is the alert. ES short 41.49. So at this time, the market is at 8:41 in the morning. how the hell do you trade options at 8:41 in the morning? Well, you got to have your account set up the right way, guys. You can't be missing out crazy opportunities like this. So 8:41 in the morning equates to 41.50. We send you a message to short it at 41.49. Well, shortly after that, you see what happens here. Literally within 70, 80 minutes, we're almost 100 points lower. And this is actually where we send you the alert to get out. Okay, so start closing today expiration puts that we have been buying all week. So all week we've been buying puts. We're actually closing them out right here. And I specifically said close out all puts because the bounce is coming. Look, I said it at 10 a.m. exact, so you would have closed out all your puts at the lows. Now, if you're not looking at the context, you probably wonder, well, how the hell are you doing this? How exactly were you able to pinpoint that particular exit there? How does this work? So understand that you cannot just look at a 1-day, 1-minute chart and all of a sudden figure everything out. You've got to look at the context. So I'm not going to be able to tell you all the little secrets in this little video, but I'm going to pinpoint some of the key fundamental things for you to focus on if you're trying to improve as a trader. So a few videos I've been emphasizing this tornado pattern in 2018. Now, clearly, if you don't know what tornado pattern is, guys, I spent about 40 minutes talking about the tornado pattern in our crypto course, which focuses specifically about entries and exits. But even if you didn't take the course yet, you would have known, okay, that if you pay close attention, that this historic analog, I specifically pointed out the purple dot was where we were just a few days ago, and Friday on that historic analog was going to be that matching of this candle right here. So this red candle after this reversal, this black reversal candle on a historic analog in December of 2018 is matching this candle. So and paying close attention to that would have given you a little bit of the context of how the Friday trading session would have gone. So just focusing on this candle right here would have given you such specific information as don't expect a huge move based off the historic analog. In other words, don't expect one of these huge red candles where the move is actually expanded. Specifically using this historic analog, understanding some of the terminology and methodology from 13 market moves, you would have known that there's going to be a slight contraction of the move after the 1,000-point drop on the Dow or 160-point move lower on the S&P that we just had on Thursday. So you've understood that I shouldn't be going. Like this is the number one mistake that traders are making. Oh, it's crashing. I'm going to go and buy this way out of the money puts, and then they don't do nothing for you, okay, because you bought them way out of the money. So understanding that after a huge move, like a 1,000-point drop in the market on the Dow, you should get some sort of contraction. And specifically following this historic analog that I've outlined in many videos over the last few weeks, you would have known that this right here, this was going to be the candle. Now, for those of you that are brand new, what does this candle actually mean? Well, this candle means that at some point, you're going to hit a low. At some point, you're going to hit a high, but you're going to close somewhere in the middle. Let me show you exactly how this candle closely resembles the candle that we actually have gotten. So this is the candle. You see how it goes lower, it goes higher. It closes like somewhere, okay? It doesn't close at the lows. It doesn't close at the lows. It doesn't close at the highs. But this is almost as perfect as a match as you can get, considering all the market conditions and all the charts I've outlined in the last 5 to 10 videos. I mean, this is as perfect of a match as any trader could wish for. And that's exactly what we get. Now, this is the context. The context is we're looking at some historic charts here, specifically in analog. We're trying to match it on day-by-day activity of the market. And so far, we get phenomenal matches, such as this huge red candle represents a great reversal that we've had from this bullish candle. Okay, well, if you studied our charts course, you would have known that all these black candles, they represent some very, very important, significant reversals in the market that are often followed by multi-day drops. And essentially, when you're trading weekly options, that's exactly the information that you need in order to make the best trading decisions. So basically, observing this historic analog, in multiple discussions I've had on it in the last few videos, you would have known, hey, this is not the day to go and bet heavy against the market, going and buying a ton of puts that are way out of the money. This is the day, okay, to potentially collect profits when the candle is doing this. And let me show you how exactly you would have known when to do this. So remember, I drew this candle structure. Basically, when you get a candle where it's going to hit a low, it's going to hit a high, okay, but overall throughout the day, it's going to trade like right here. This overall is not a super bearish move. So overall, when you expect a candle like this, the number one criteria you should be focusing on is looking at the VIX and the recent levels of the market, which you wouldn't be able to do if you're just looking at a 1 day, 1 minute chart. So you got to go look at a 2-day chart. And sometimes a 2-day chart is not going to give you precise information on what your exits and entries should be. All right, so this is overall how things look on a 1 day, 1 minute chart, which we assign a move 11 to such a formation because the market overall, it opens lower, it gaps down in relation to the prior close. Okay, it does all this crazy stuff, really not going anywhere throughout the day. Okay, and it finishes still lower than the prior day close. That's a move 11. That's one of the 3 variations of a move 11, guys, right there. You should know it. If you studied the 13 market moves course, this would have saved you a ton of money trading today on Friday. So basically, you expand the context by going to a 2-day, 2-minute chart. Well, 2-day, 2-minute chart clearly wouldn't give you a ton of context on what's going on. You got a huge drop. 1,000 points here. This was your day. You got another drop going on. I mean, if you don't know the rest of the context, okay, you could easily mess up such a trade. You could easily watch the market and feel like, okay, I miss on the drop right here on buying puts. Oh God, everything is dropping again right here. I missed it. The market was moving too fast. Oh my God, surely enough. I mean, for 5 weeks I've been missing on the drops. Well, damn it, it's dropping again. I'm going to buy puts right here, and this is exactly the worst possible time to buy it. Now, how you could have avoided that is simply understanding a greater context of the chart, looking at a different time frame. So now we're at a 5-day, 15-minute chart. And oftentimes, I have traders ask me, well, Leo, what time frame chart do you trade off? What time frame chart do you look at? Fucking I look at all of them, okay? If you want to make a ton of money in the markets, okay, you can't just look at one-time chart frame. Okay, you got to look at a 1-day, 1-minute chart, 2-day, 2-minute chart, 3-day, 3-minute chart, 5-day, 5-minute, 5-day, 15, 10, 30, okay, 20-day. I mean, you got to look at a lot of charts to get the idea of the context of the market. Okay, so clearly if we look at a context, just expanding our view a little bit to a 5-day, 15-minute chart, guys, I mean, it's simple, right? We just hit the low on a Monday at 40.56. So some of you were going, well, Leo, how do we, I mean, some of you maybe were here or here, you're like, how the hell we're going to go to 40.56? And understand, when we outline key levels in the market, it's not like, you know, it's going to hit precisely to that level. So give or take, sometimes it makes sense to start taking profits just a few points away, a few points away, a few points under, okay, but you've got to start scaling out of your position. In other words, don't go ahead and sell your entire position in one shot, but start scaling out of your position. So when we're getting here to 1480, 4080, 4070, 4060, within this area, this is when we were collecting profits, understanding that we're just a few points from this 40.56 low that was set on Monday. And it was a great probability we were going to revisit that based on the 13 market move sequence, which I've shown you slightly a little bit inside in the last video, how oftentimes you'll have a sequence where you got a move 10 on the Fed announcement date that's going to be followed by a move 3, and it's going to be followed by another bearish move, okay, such as a 2 or an 11. Sometimes you can get a slightly bullish move like a 4, but based off the key level and based off the key resistance level, which was 41.50, as I've outlined earlier by sending the alert, okay? So basically this was your level to short, this was your level to buy close to this area of 40.56. So just expanding your chart instead of looking at a 1-day chart, 1 day, 1 minute, if you're an active trader, you definitely got to look at a 2, 3, and 5-day view to understand exactly what you're working with. And so understand that this was likely to be an area where the market could stop, pause. This could be an area that the market may bounce off of. Okay, that's exactly what we've looked at and said, listen, if we get to this area, close to this area, within 5, 10, 20 points, we should start collecting. We should start scaling out of the position. So if you notice, my first alert was like start selling. Start selling means start selling 20% of your position, 30% of your position, okay? Which was followed up 11 minutes later with a message, sell all, which coincided with an absolute bottom right here. So context, expand the context, expand your view on what overall you're looking at. The second chart to look at to make sense out of what the overall market chart is doing, such as S&P 500, is to look at the context of the Vix. So if you also look at the context of the Vix on the 1 day, 1 minute chart, you're not going to get a whole lot of data, all right? But if you expand it to a 5-day chart, 10-day chart, you would have known that 35 was pretty damn close to a prior high of 36 and some change, which, okay, we had on Monday when we hit that level of 40.56 on the S&P futures. So understanding that we're getting pretty close to that level, we're only within just a few points, literally 6 points from that low, would have helped you nail that exit. In other words, we were only 6 points away, but we were still pretty far off of the 36 mark on the VIX. Basically, what the market was saying, not today, buddy, not today. We're not going to go way lower today, because we got a divergence situation going on where, you know, the VIX, if we're going to break that level, should have been way, way higher. We should have been at 36 already by the time we're hitting that area right here of 40.62. But we're still on the 35 handle. Okay, so that gives you that a little bit of a divergence. Basically, we're close to making a new low in relation to the weekly low, but also in relation to the multi-week low, also in relation to the multi-month low, but the VIX is failing to shoot higher, okay? And once that low of the day is set and the VIX begins to actually drop, okay, this is not the day, guys. This is not the day where you want to go aggressive on puts. That's why if you're an alert member with us, you know that we actually told you to buy calls right here. We told you to buy calls. Now, just because we're going calls on certain type of stocks doesn't mean that we're overall bullish on the market. And let me break this down to you. So basically, when we drop to this level 40.62, all right, so you would have known to close all puts by that time. You would have known that the bounce is coming. But how do we actually specifically selected dash calls in 70 strike? That's what I'm going to break down for you so you have a little better understanding. Now, Dash actually reported earnings, all right, on Friday morning. And you would have known that this particular stock is going to have a little bit more volume that day in relation to some other stocks that did not report earnings. You would have known that this stock is going to have some catalysts. But how would you have actually gotten prepared to that and combined the information? So let's take a closer look here. We didn't get in right at the very, very bottom, but if you work with me and some of the other coaches this week, then you would have known that we were getting into dash calls right about 10 a.m., where at that point it was trading about 64, 65, 66, and all the way up to 68, 69 level, we kept sending you the alerts to buy calls, to buy calls. Now, why would we be doing this, guys? Okay, well, you could have learned a lot about this sort of move from Trade Like a Rockstar course, which specifically focuses, right, on trading earnings. So this is a specifically earnings play, which had a very high probability. Now, when we study our earnings plays, okay, it's not about whether something goes up or down. It's not about whether, okay, The earnings report is good. Did they beat on earnings? Did they beat on revenue? Did they miss? None of that shit matters, okay? The only thing that matters is the behavior of the stock. In other words, the earnings report can be great, the stock can drop. The earnings report can be really bad, the stock can go up. If you keep paying attention to what's actually in the earnings report as a trader, you will fail 99% of the time, because what appears to be positive could actually produce exact opposite outcome from what you expect. So as you can see, the earnings were good. So the initial reaction was high in the stock. As soon as the market opens, it drops like a rock. Okay. But if you studied, like we do here at 13 Market Moves, we study last 8 quarters of behavioral characteristic, what actually the stock does in relation to what the report is, you would have known that this stock has an insane probability of initially dropping and then during the actual trading session moving higher. Okay, so understanding that this has about 77% probability, okay, you would have picked number 1, for Dash to be one of the stocks on your watch list that day to be paying close attention to, all right? Then you would have been paying a very close attention to the key levels on the market and the VIX and the 13 market move sequence, and this is how you would have nailed this move, which would be highly contradictory if you've been watching the market drop and drop and drop, hearing more people getting bearish and bearish and bearish. This is the kind of trade that you would be least likely to take on a day when, 95% of the tickers, if you look on your watch list, they're red. So this actually is one of the best type of opportunities if you study the behavioral pattern, right? The behavioral pattern is what gets you paid, because you're going and betting against against what the market expects when everything is in the red. But knowing this behavioral pattern that has a high probability of outcome of over 70%, okay, what that allows you to do is buy these call options super cheap. I mean, these 70 strike calls, we're buying them for as little as 50 cents to a dollar, $1.20. We're buying the 75 strike calls for as low as 20 cents. And look, even 77 calls, they were making good bit of money, and those were going for like pennies. I mean, 7-8 cents at one point if you pulled the trigger right here on the alert. So what could you have done? Well, let me just show you if you knew exactly what to do. If you were just a member of the alerts, and when you got the alert, if you would have gotten in, guys. I mean, here's what some of the guys made money on this trade. All right, so here's $17,000 profit. As you can see, the cost on this trade was $1.14 for this particular trader. At the time this snapshot was taken, I mean, they were going for $4. He was making $17,000, $18,000, but you know that Dash actually went way higher than 73 bucks. It went all the way to 77, and so they were worth as much as $7, a little over $7 at one given moment. So this was a 7x trade. This right here, this guy got in at 92 cents. As you can see, his cost on the 70 strike calls was 92 cents. So he's got a little bit better entry than this person. That's what I'm saying. Like, sometimes 1 minute could make a huge difference. Okay, I mean, this is about a 20% increase what this guy paid in relation to this guy. So when the market is moving fast, guys, my suggestion, if the spread is low, just go ahead and buy at market. You're going to be sitting there with a limit order, and you're going to miss out on some killer trades like this. So 32,000. Now, depending on exactly where you started selling and so on, you might have gotten this much or more or less. It just depends. Like, look at this person right here. He starts with literally 1,600 bucks for the day. Knocks out a $20,000 gain at one point, making 19,000 on this Dash position. So he was buying 75 strike calls, probably for pennies, and then it shot up to 248. So now some of these guys, again, I mean, you are in control of your account when you trade with alerts, when you trade with a coach, all right? And sometimes our goal is to guide you through the trade, but as you can see, it's up to you how quickly you're going to execute. So this guy executed a little bit better than this guy right here. As you can see, they're carrying about the same amount of contracts. He's got 59, he's got 60. But the impact between what this guy's making already and what this guy's making already is huge, right? And a lot of differences, it's in the cost of your entry. So 1-2 minute difference can make a huge difference. Where you're up 18,000, where you're up, $25,000 or $32,000 in the trade. But the bottom line, this was a call side trade that was pre-planned way ahead of time. And guys, we plan this stuff hard. Look, I'm not going to show you all the details here, but like this is just a sample of all the stocks that we looked at. I think this is a snapshot from a couple of weeks ago. Yeah, like April 25th. But all the stocks we look at, we study the historic DTR on these before they go into earnings, the last 8 quarters of the move. We keep track of the actual move that takes place. So the next quarter, we're prepared and we know the behavioral pattern of the stock, guys. I mean, these things, okay, they takes hours and hours and hours of research. So when you sign up with a 13 market moves coach, he's going to have all that information. You're going to be able to make the best possible decisions while the market is moving fast. So some of you ask me, well, are you going into calls now? Guys, just because the market is getting a 1-day pause. Now, never mind, it's still a negative move, and the market ended up finishing lower, like 33 points in S&P. Okay, no, a 1-day pause in the drop is certainly not a change or a break in a trend. So based off everything else that we're seeing, guys, and based on this historic pattern, based on the historic analog, we're actually looking at, now that you know a little bit more detail about the candles, right? What is Monday looking like in relation to what we had on Friday? So this candle was Friday. This candle based off historic analog, which seems to be highly precise right now. And of course, that could change. All right, so you got to go candle by candle every day, trying to match this close to a historic analog as possible. But where we see it right now, we're looking at a gap down, not a huge gap down, but we're looking at a gap down on Monday, and we're looking overall at a move lower throughout the day. And notice the next day, Tuesday, could also be a move lower. So we could be going for this sharp move, which is about 11% as that outlined in the last video. But as a day trader, swing trader, you got to understand when you put in your positions, what is next? What is next? Well, next, based on the historic analog, we got a greater red candle. And if we combine it with some of the context I've shown you, all right, this is basically what we're talking about. We're talking about in a 5-day, 15-minute chart, we got a formation, which you would have clearly recognized if you studied our charts pattern course, guys. This is a head and shoulder formation. Normally, it could still go sideways for a little bit and then drop. But in this particular case, we think when we do a historic match with the analog, this thing could fall out. I mean, we're on the verge of breaking that key level right here, which we didn't break on Friday. But I think we're going to take another shot at it Monday. So watch this level, 40, 56, 40, 62. If we break that level, okay, this red candle can really materialize into a substantial drop Monday, and that's why ahead of this bearish formation on the 5-day, 15-minute chart, irrespective, of this last minute sort of bounce into the close, which we were expecting, irrespective of this bounce right here, which we nailed down to a minute. Okay, we're overall bearish on the market. That's why we went with highest probability for a Monday is a move 3, guys. And so study move 3 if you really want to profit from the market. You got to understand the structure of a move 3 as a day trader, how to trade it multiple times throughout the day. Or if you're a longer time swing trader, you got to understand when not to panic and when not to jump out of a move 3 so you can collect the greatest possible gains. Now, to just review what has transpired this week, we're buying puts right here. We're buying puts right here. We're buying puts right here. We'll send you multiple alerts. We're adding a ton of puts right here. And we cashed out. This was our exit right here. So overall, we've got approximately a 200 point move lower in the S&P, and basically that gets you paid as a short seller. On weekly options, guys, some of you, congratulations, you 5x'd your accounts this week easily between the winning trades, between the losing trades. Overall, guys, nice job, majority of you. So I'll add this, that DXY, guys, this is why the market was not necessarily breaking lower. It wasn't necessarily moving higher, because DXY sort of stuck just under this 104 level, which makes it highly dangerous because it could actually break out higher. And if DXY breaks higher above that level, this is a triple top, multi-month top in dollar. If it breaks above 104, I mean, we could get a really, really good move expansion to the downside overall in the market. So pay close attention to DXY. If it breaks out, look, the setup looks highly bullish. It's good, but a lot of times, sometimes things will retract backwards, and then they'll take another effort at breaking out higher. So Monday's a critical day for watching this chart, as well as the chart I've outlined for you to keep close attention to is the Vix chart. So this is a Vix 20-day chart. As you can see, it looks like potentially a triple top formation. But again, if dollar breaks above 104, we should also see Vix breaking above Friday's level, which was 35 right here, and above Monday level, which was 36 right here. Again, what could happen initially is we could see a slight drop followed by a bounce, but be ready. Watch these levels. They're very, very critical for a market right now. And if you'd like to actually trade these moves with a coach, you should certainly sign up as soon as possible. But let me just summarize everything that we've talked about in this video, so hopefully you can take some notes and register it somewhere so you could be better positioned to trade next week. So overall, if you want to get 20x type trades with 13 market moves option strategy, okay, what you want to avoid doing is do not short the lows at the point where VIX is dropping. There's certain conditions clearly where you actually do want to go short the lows, because those lows eventually will be broken. But you want to avoid doing that just after the market had a huge move, like a 1,000-point move on the Dow or 160 points move on the S&P, and you notice signs that VIX for that day is not setting new highs. You want to avoid shorting the lows in those sort of conditions, okay? Those are the days that predominantly you want to be bullish, not bearish. Focus on a 13 market move sequence overall, and focus on 13 market move simple for a symbol that you're actually trading. You can certainly learn the 13 market moves and calculate that on your own. It's actually not very difficult to do. Focus on the overall context of the chart. The context of the chart. Don't just be looking at what the market is doing in the next 1 to 5 minutes. Get a better view of the overall market on multi-time frame charts, so you have a better idea of what's really going on. Not what's going on next minute, 5 minutes, what's really going on, because that's what's going to allow you to capture a bigger move. And clearly, 4 is pay close attention to historic analog, because those could be so in tune with the current market conditions at times. Just understanding that candle structure and formation can allow you to pick the proper strike price for the day, could allow you to be not overly bullish or not overly bearish, could allow you to definitely nail a lot more of your entries and exits. So if you struggle with any of these things or executing these things, guys, learn 13 market move sequence today. Get your 13 market moves course at 13mmtv.com. And more importantly, sign up with a coach to trade next week. We got killer earnings trades just like Dash that are going to be coming up next week. We've got market potentially making some expansion on the current moves that we have seen this week. So trade next week is going to be a lot of fun, especially if you are on the right side and if you know exactly when to enter and when to exit. Guys, let's roll. I'll see you in the next video soon.